Hello traders, the title of this video is a stock trader explains a specific high probability trading signal. Alright, a high probability trading signal is a trading signal has a more winning rate than a losing rate. Personally, any trading setup or any trading signal that generate more than 60% winning rate in comparison to 40% losing rate, it is a high probability a trading setup. So even though that trading system, trading strategy, trading method, or trading signal may generate 40% losing trade, if it can, generate a 60% winning rate consistently, that is a high probability a trading setup. Feel free to disagree with my definition of a high probability trading setup because it is about my trading style. Alright? So any trading setup, any trading signal that generate more winning rate, that is more reliable, or more reliable, that is less likely to generate a losing trade is a high probability trading setup. So a high probability trading setup is a trading setup that has, in fact, in theory, a high probability to generate, a winning rate. So where do you put your high probability? Is it 50%? For me, it's 60%. For other traders, they may say 70%. All right. Okay, very important. So now, in this tutorial, what I want to show you, I want to explain to you a specific high probability trading signal. Let's get started. You see where I put my green spot here on my chart? That is a high probability trading setup. So I want you to look at it, to admire it, all right, and let me know whether you have a bit of idea or what will be your definition or why would you think that this is a high probability trading setup. Because for me, it's a high probability trading setup. So look at it for a while and let me know in the comment section why do you think that it's a high probability trading setup, or why you do not think that it's a high probability trading setup. All right? So the reason why I think this is a high probability trading setup, you can see that the price going up. Okay, it's been higher lows, higher highs. Okay, that's what the language of the price in an uptrend. So one more thing I want to clarify with traders when we are talking about high probability trading setup, we must define the high probability trading setup with the price action alone. Don't use anything else to call anything a high probability trading setup. All right? We can use like technical indicator in conjunction with the price action to talk about high probability trading setup. But do you not use anything alone apart from the price action, or combine something else with the price action before you start talking about high probability trading setup. So price forming higher lows, higher high, which is the language of the price in an uptrend. Here it is, look at it, my friend. Price form a lower high in comparison to this one here. So what's coming to your mind? Why the price in an uptrend should form a lower high? It's a weakness of that bullish momentum, yes or no? All right. Now, as it starts going down, that bearish momentum is confirmed right here because in an uptrend, the price finally form a lower high, which is a contradiction, a paradox. Yes or no? It's a paradox. We shouldn't see a lower low in an uptrend. But then we put a question mark on it here and say, why in the name of God are you forming, a lower low? But he recovered. But as he recovered, by going up, he failed to form a new higher high. So that failure to form a new higher high is indicating to us that there is a high chance that this one here, this is in fact another high probability setup here, is the price has a high chance to come down. So that is a high probability setup. So now look again, as the price failed to form a new higher high in an uptrend, so we see the weakness here, the confirmation is taking place here. It failed to form a new higher high. Why the price couldn't form a new lower low in comparison to this one here? So something is brewing. So the failure of the price to form a new lower low after failing to form a new higher high. So this low, normally if the bearish momentum is strong, should go below this low here. But it failed to do that. Not only that, my friend, look carefully. It also was above this low here. This one, the previous low. This is a high probability bullish trading setup. If you look carefully, my friend, here it is. You see, it was retesting this high here. It went up all the way up there and retest that high here. The retest of the higher low. The CCI also was turning here. The retest of the higher low. CCI turning. It's a powerful. Here it is. This is a beautiful, gorgeous, high probability trading setup. Now, I did not say signal yet. That high probability trading setup will now generate on the signal time frame a high probability trading signal. Are you getting it now? So because I'm on a 2-hour time frame, I'm using 2-hour time frame to illustrate this for you. But you can see this on any time frame, weekly chart, monthly chart, daily chart. It's all about the language of the price. When we are talking about the high probability trading setup, this is one beautiful example, but on a 2-hour time frame. So for scalpers or day trader, you see here on a 2-hour time frame, you see 2-hour time frame trading setup. Can go to the 15-minute time frame or 10-minute time frame for the signal, and then as the signal is 5 years here it is, you see. So this is where we were before. Now it formed a new higher high on the 10-minute time frame. So that is your signal there, right there. You are day trader, and then you can go nicely to the 3-minute time frame or 2-minute time frame to enter the trade. Okay, carefully at this junction here, and on the 2-minute time frame, we were here on the 10-minute time frame. Here it is, the price so gorgeous, give us again another higher low on the 2-minute time frame, and here it is. You buy here, you high your stop loss somewhere below this one here. We can apply this strategy even on the yearly chart, quarterly chart, monthly chart, weekly chart, any time frame. Well, I don't want this video to be too long because I want to give it to you raw. All right. Is that an American accent? Raw? Okay. Now this is to talk to my ear. Because we have more American subscribers, we have a lot of Indian subscribers. So I'm talking more about Americans now, okay? So this is about stock trader explains a specific high probability trading signal. That signal is coming from a trading setup on the 2-hour time. So we are analyzing the price structure in an uptrend. We are giving priority to higher high and higher lows. Now in an uptrend, we see a lower high. First indication that the price is something, okay, is not adding up, okay. We are observing the price. Now the price failed to form a new higher high. This is also a high probability setup. We sell. But look, as we sell, the price couldn't break below that high here. It couldn't form a new lower low. Another contradiction. So anytime you see a contradiction, talking about the language of the price in an uptrend, it's a high probability trading setup. Now use a top-down trading method to trade. If you buy in that region, somewhere here, 46.71, price went up all the way to 47.97. Beautiful trade for day traders and also for scalpers. Let me know whether this video has been useful to you. If it has been, all right, let us know by giving us the thumbs up. If you think that, George, I don't know what to think of you today, all right, this is another blah 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 from London, all right, let us know, giving us the thumbs down. And this will put me under pressure to improve my next recording. If you think that this is an essential tutorial for other traders, all right, feel free to share it on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about a stock trader explains a specific high probability trading signal. Happy trading to you all and speak to you very soon.